Welcome to Chapter 4, Process Costing. So in this chapter, we're going to talk about a different type of costing. In Chapter 2 and Chapter 3, it was more about product costing, or what we call job order costing. Process costing is applied to a different type of product. So let's take a look. Both systems assign material, labor, and overhead cost to product. So that doesn't change. Whether you are doing a job order or process costing system, you're still applying those three major items. Both systems still use your manufacturing accounts, the manufacturing overhead, raw materials, work in process, and finished goods. And the flow of costs are the same. They go from raw materials into work in process, from work in process, eventually to finished goods. We assign manufacturing overhead. But here's your major differences. In process costing, you're making a very homogeneous product. So it's used when a single product is produced on a continuing basis for a long period of time. Job order costing isn't like that. It's used when different jobs having different production requirements are worked on each period. So the example they give in the book is Bounty paper towels that Procter & Gamble makes. They're a very homogeneous product. Many rolls of paper towels are being made the same way in a mass production environment. Job order costing would not apply there because you can't identify as easily, materials and labor. Okay, so we use a different type of costing system called process costing for those types of productions. Systems accumulate cost by department instead of jobs. Job order costing accumulates cost by individual jobs. In a process costing, systems compute unit costs by department. Job order costing, unit costs by job on the job cost sheet. So it's just a different approach because of how the product is being produced. So here's a quick check. Process costing is used for products that are similar and produced continuously. Now, we said we process them by departments. So processing department is any unit in an organization where materials, labor, or overhead are added to the product. So the activities performed in a processing department are performed uniformly, so the same way, no matter what product unit is being produced. The output of a processing department must be homogeneous, meaning it's the same thing. It's always paper towels. Products in a process costing environment typically flow in a sequence from one department to another. So just to take a time out here, we'll be looking at this learning objective 4-1 in more detail, but take a look on page 163 of your book just to get a better grip of what we're talking about here. And in this example, they're talking about potato chips being made. And it's a great picture and how we are now determining costs in departments, process departments, rather than jobs. So the first is we take the raw materials, the potatoes. Now, what happens in the potato preparation department? All they're doing is preparing potatoes. That's all they're doing. The same job over and over and over. The partially completed goods, the prepared potatoes, are then sent to the next processing department where all they do is cook. Cook and cook and cook and cook. When they're done being cooked, they send them to the next processing department, which packages and inspects them. So 3 different departments. In each department, they're doing the same thing. They're either preparing, cooking, packaging, and inspecting to get to the finished goods. So that's what we're talking about here. When we talk about process costing, you have to have departments that are set up doing the same thing. And what comes out of each department is homogeneous. It's always the same. So now we're going to look at recording the flow of materials, labor, and overhead through the process costing system. So as we said before, you're still going to have direct materials, you're still going to have direct labor, and you're still going to have manufacturing overhead. And all of these costs must flow into work in process as the product is being made, ultimately to finished goods when it's completed, and then when it's sold, the cost of those goods go to their final destination of cost of goods sold. So still all the same items, still the same types of accounts involved, it's just that how we determine the costs is a little different. In a job order costing system, we did direct materials, direct labor, manufacturing overhead to a job or to jobs. They flew to finished goods and then ultimately to cost of goods sold. In a process order, we're going to put direct materials, direct labor, and manufacturing overhead into each department, each processing department. And then those total costs, once they go through each processing department, will then go to finished goods, ultimately to cost of goods sold. So we're going to look at a T account and journal entry view of the process cost flow. So assume there are two departments we are looking at for purposes of seeing how the journal entries would be done. And it probably flows with what's in our, but let's take a look. When it comes to the flow of raw materials could flow, and this is on page 164 of your book too, into the work in process department B and the work in process department A. So if you were talking about the potato chips, it could be the preparation department and the cooking department. So raw materials will come out of the storage area. Maybe they'll go to each, maybe they only go to one. It all depends on what's being produced. So they would debit work in process A, preparation, work in process department cooking for the amount of the materials transferred to those departments, and then credit raw materials. Any salaries and wages earned would be debited, direct labor would be debited to each department individually, depending on who's working where. And then of course our credit would be salaries and wages payable or cash. So we would debit work in process directly, whether it be the Department A, which I'm calling preparation, and Department B, which could be cooking, for the direct labor associated with those departments. We then credit the salaries and wages payable. When it comes to overhead, we're going to apply the overhead, like we did before, to each department. So when we calculate the applied overhead, we will debit to work in process department A, work in process department B, so that would be preparation and cooking for its applied amount, and credit the manufacturing overhead. When the potatoes, let's say, in department A, the preparation are done being prepared and are transferring over to the cooking, all costs associated with preparing those potatoes in department preparation will be credited to department preparation or department A and debited into the work in process department B. So they flow through to the next department and are added to any additional direct materials, labor, and overhead that are created in department B or the cooking. So we would debit work in process department B, credit work in process department A. So they move to each department. Ultimately, when they're done in department B, and the assumption is that they finish up in department B, all the costs associated, those transferred from department A and those created in department B that are now being transferred to finished goods, are debited to finished goods and are considered the cost of goods manufactured, and we credit that final work in process account. And there's your journal entry. And then, of course, when the goods are finally sold, if they're the potato chips, debit cost of goods sold, credit finished goods. So the flow through the accounts is just like a job costing system, but it's the determination of the dollar amounts that will be different. And there's your journal entry. So let's talk about this, okay? In a processing system, it is very important for us to understand equivalent units of production. Now, what are they? Equivalent units are the product of the number of partially completed units and the percentage completion of those units. So it could be a unit that is half complete. Well, how do you convert that to call it a unit? So these partially completed units complicate the determination of a department's output for a given period and the unit cost that should be assigned to that output. So if you only have half of the potato chips ready, is that considered a unit? How much of a unit? So these are the things we need to define. So let's say you have two half-completed products. Well, that's like saying there's one completed. So 10,000 units that are 70% complete are the equivalent to 7,000 complete units. Now that doesn't mean we say, oh, we're going to sell or transfer these. No, it's meant for assigning costs. That's why we need to determine equivalent units so we know how to assign direct materials and labor and overhead. So for the current period, Jones started 15,000 units. Okay, so they started 15. You could jot this down. They completed 10, leaving 5,000 in process, 30% complete. So how many equivalent units of production did Jones have? And if you were right, they completed 10,000. Since they only started 5,000 more and they're 30% complete, in an equivalent unit number, 1,500 of them are the equivalent units of being completed. So 11,500 is your equivalent units. So that's how you determine that. The number that are actually completed plus the additional amount times the percentage that it is completed. Add those two together. Now, equivalent units can be calculated two ways. FIFO, which we're not going to cover, the weighted average, which is what we're going to focus on. So let's take a look at how we would determine the equivalent units of production using this weighted average method. First of all, weighted average method makes no distinction between work done in prior or current periods. So it ignores that. It blends together units and costs from prior and current periods. Weighted average. It determines equivalent units of production. So we got to do that calculation we just did, where we take a look at how much do we complete, how much is still going, but what percentage is completed. And it does it for a department by adding together, this is important, the number of units transferred out plus the equivalent units in ending work in process inventory, like we just did. So how do we treat direct labor? Direct labor costs may be small in comparison to other product costs in process cost systems. And this is a typical graph. You can see the direct labor dollar amount is very low compared to direct materials and manufacturing overhead. Direct labor and manufacturing overhead are sometimes and usually combined into one classification of product costs called conversion costs. So instead of keeping them separate, we'll have direct material costs and we'll have conversion costs, which was defined back in Chapter 1, direct labor plus manufacturing overhead. So let's look at an example here. Smith reported the following activity in the assembly department for the month of June. So we're just focused on one department. It started the month of June with 300 units, 40% complete as to materials. So when they started the month of June, they already had 40% of the materials in those 300 units. And the direct labor and overhead associated with those 300 units was 20% included. They started an additional 6,000 units and they transferred out 5,400 units. They still have 900 units at the end of the month. 60% of the materials are already included and completed. 30% of the conversion costs are included in those 900. So they're 30% complete with regards to conversion. That's the direct labor and the overhead costs. So that is our information. Now let's see what happens. When we're determining equivalent units for this department, we start with the number of units transferred out. 5,400 were transferred out with materials and conversion. So that's the equivalent units of the items that were transferred out, and they were totally complete. When it comes to the materials, we need to determine the equivalent units of those 900 that were started. Since with regards to material, they're 60% complete, the equivalent units of the ending work in process would be 540. So the equivalent units of production in June with regards to materials, 5,940. With regards to conversion, they were only 30% complete. So to translate those 900 units into equivalent units for purposes of conversion, 270 of the units would have been completed, or a total of 5,670. So the equivalent units of production in that department during June are listed. So that's our first step, determining those equivalent units. Oops. So equivalent units of production always equals those completed and transferred during the period of time you're looking at, and the equivalent units remaining in work in process, which is taken by the number of actual units still being produced times the percentage of completion with regards to direct materials and conversion costs. Add those two together. Now, with regards, and that's just showing you the work in process in a no graphical method, they're saying 300 units came in during the month, 5,100 were started. Okay, so there was a total of 5,400 units, or 5,100 units were started and completed. So there was a total of 5,400 units completed and 540 still that were started, and 60% of which were complete. So it's just showing you it in a graphic method. Same with the conversion costs. Because I want to get into now, I think we're okay with determining the equivalent units. And if you have any questions about that, please make sure you post them on the discussion board. What I want to see now is, well, how do we apply and compute the cost per equivalent unit using this method? How do we come up with the product cost? So what we do is we first say, okay, 300 units were in beginning work in process. Materials, 40% complete, and there's the dollar amount of those materials. The conversion of beginning inventory were only 20% complete, and there was the dollar value of those items in beginning inventory. So you would need to be given those items. The production started during June were 6,000 units, 5,400 left the building, right? They went to the next department. How much more costs were added during the month? Well, material costs added during the month, 118,621. Conversion cost, 81,130. So here's how you want to think about it. The beginning of this month, the balance in the work in process account would have been the 6119 plus the 3920. That would have been the beginning balance of work in process for this department. 10,039 if I did my math right. Yeah. Okay. They debited the work in process for this department 118,621 and 81,130 during the month. Okay. Now they're giving us information there so we can determine equivalent units and determine overall costs. So let's take a look. The formula for computing the cost per equivalent unit is the cost of your beginning work in process inventory plus the cost added during the period divided by the equivalent units of production. And what you got to be careful of is that you have equivalent units of production for direct materials and for conversion costs. So there's our formula, but let's see how we would compute it for this example. Total costs were 10,039. 6119 for materials, 3920. That was the amount in our beginning inventory. Total cost added to the department during the period was a total of 199,751. 118,621 were from materials, 81,130 from conversion costs. So the total cost of materials from the beginning of the period and added in 124,740, and those are associated with the products that were being worked on, and the conversion 85,050. We already determined the equivalent units for the material and the conversion based on the number of units that were transferred out and the number of units that were started times the percentage they were completed. So what we do now is divide the total material cost from the part that started with the beginning of the period plus all the additional cost added in, divided by the equivalent units determined for that month. So the cost per equivalent unit for materials, $21 per unit. We do the same computation using the conversion cost total. So we take the beginning amount that came in to the beginning of the period from the units that were started but not completed, plus the additional amount paid for during the month, and divide that by the equivalent units completed at the end of the month, $15 per unit. So the cost per equivalent unit will be the direct materials plus the conversion cost, because remember what's in conversion? Direct labor and manufacturing overhead. So $36 per equivalent unit. So that's how we find the cost per unit. Now let's assign the cost to units using the weighted average method. When we are looking at our assembly department, the cost of ending work in process inventory and units transferred out, we take the equivalent units which we determined, which was based on the percentage of them that were complete. Multiply them by their cost per unit. Materials and conversion have their own separate. So the cost of ending work in process inventory for the assembly department at the end of the time period we're looking at will be the material amount plus the conversion amount added together. And that represents the units that are there that are being worked on, how much they cost so far with regards to materials and conversion costs. When it comes to the ones that are transferred out, there are 5,400 that were transferred out. We will multiply each of those by the cost per equivalent unit. So the amount that should have been transferred to the next department or to the finished goods, 194,400. Whoops. Sorry, I know I went kind of fast there. So if you have any questions on that, please make sure you let me know. And there's also another example of that on page 172. So you can take a look at that. The final area of this chapter deals with preparing a cost reconciliation report. So take a look. In the assembly department, they want to do a cost reconciliation. So they're going to look at what do we need to account for? Well, this period, we had total cost of $209,790. That's how much between beginning work in process, the $10,039, and all the costs we added, the direct materials and conversion costs that were actually happened during the period, are $209,790. Well, how much of the cost did we assign to our work in process inventory from the previous slide? So you're going to have to kind of look back there on your PowerPoints. 15,390 was accounted for in the work in process ending inventory at the end of the month. The cost of the units transferred out, so would have been sent off to the next department, was 194,400, and we just determined that in the last slide. So we've accounted for all the actual costs that happened. So at the end of this month, the work in process inventory in the assembly department will be 15,390. Okay, so that is how we handle process costing. A little different approach. The job order costing, we were applying the manufacturing overhead and direct materials and direct labor a little differently. Now we're using equivalent units because of this homogeneous characteristic of these type of products that would use the process costing system. So if you have any questions, please post them to the discussion board. I'm going to be setting up a more robust example using a problem in our book and problem 415A. And that's the end of my discussion.